Hi, my name's Charlie Burton. Welcome back to Tip TV. My guest today is a winner of a recent Easy Trader trading competition. So I thought I'd better get him in and talk about his trading style. Manoj Kumar, welcome to Tip TV.
Thank you very much for inviting.
Now, before we talk about your current trading, and you just won our little competition last month, and let's rewind the clock a little bit and tell us a little bit about your trading. What got you into the markets? How long ago was it? What were you trading? And tell us a little bit about your experiences.
So I started investing into the stocks and shares in 2000. Since then, I kept investing up until 2008 when I thought of expanding my horizon to include other asset classes like FX, like indices. The reason is because this is more, there is more liquidity into these asset class compared to the stocks. Mm-hmm. And also I was thinking to take this to the next level, and that's why I decided to educate myself in year 2008 and took a couple of educations and then started getting involved and started trading and then started assessing my progress year on year. Then I realized that I need more education, more on the technical side, because I was fundamental in my approach.
Was the fundamental approach because of your share trading? Because that would always be more investing, had it?
Exactly, yeah. Right. And that was more on a very long-term horizon.
Yeah.
And I was doing the top-down analysis on that, and it helped me. But in the asset class like FX market, there was some other skill set which I required, which I then acquired those skill sets about technical analysis, which gave me an edge to decide an entry into the market, which fundamental obviously was not giving me. So I used the combination of both fundamental and technical, doing the top-down analysis approach, and then looking into finding out, screening which asset class I should go for, and then start investing. So since last 8 to 10 years, I have done various investments and then seen the market quite consistently going each and every year from the crash to the reviving of the market. And that's how I got into this, and looking forward to take this to the new level again, maybe to seek some business opportunity into this area.
Okay, so rewind the clock a little bit. So 2008, 2009, you've decided to get into maybe shorter term trading. Okay,
so
you put yourself on a couple of courses, learn a little bit about technical analysis. Yes,
exactly.
But let's talk about some of the stumbling blocks that you may have had along the way. You mentioned before when we had a chat that you had a year out at one point. Talk to me about that phase there where you were still learning your craft.
So I took a year off to learn this and give it a good time and be into the market and do the investment into the various asset class. So the biggest stumbling block that I found is the good educator, which I was.
Hold on a second. Good educator. Camera. Yeah, that's us, isn't it?
Yes, I found you, but quite late.
You found us late. Yes, what happens with everybody. Yeah. They always come to us last. Yeah.
So I went through a number of educators, went through their strategies, and I always questioned about their strategy.
Okay.
I always also questioned that why they are just teaching, why they are not getting involved into the trading. If they know these things, why they are not getting involved into this, and why they are just teaching.
Yeah.
So and then I found in the last yourself Easy Trader, and then I was quite happy. I saw exactly things working in the live environment. I saw
because we put our necks on the line.
Yeah,
and I trade live all the time. Exactly. So there's no shady grey area there, is there? Yeah, exactly.
And there are various things which is as per the market dynamics. When it changes, then it helps me learning how things needs to be changed as well.
Yeah. Okay. So, so you've been through this ride, like most people have been. Your trading style now, it's more still swing trading, isn't it?
Yes.
So, but I assume it's a lot shorter time horizon than when you're obviously investing. So, your swing trading, are you looking? Is it just a few days? Is it? Or are you still looking to hold positions for a few weeks? What is your time horizon?
Normally, for a few days to a few weeks, no more than that, because once I will see that the confidence comes back in the market from the fundamental perspective, then I will do an investment on a longer term horizon, but not now at the moment.
Okay, so you're talking about fundamentals. So how do you use the fundamentals with FX trading? Because FX is a lot more sentiment and technicals, isn't it?
Yes.
There is a fundamental backdrop, obviously, around what central banks are doing, but how are you using fundamentals for your trading at a high level? How are you doing that?
So the fundamental, there are a few things like the Bank of, say if it's England, then it's a Bank of England policies, what they are going to be doing next, what the market sentiments, how the economy is performing, and then looking into the global scenario first of all, what the other countries are performing, and then how things are moving from the banking perspective, and then take that detail and then apply it into the FX, because technically, for example, GBP pound, obviously the interest rate was cut down, but again things are going different into the different environment. So based on that, I take the fundamental view and then go into the detail of technical to find out the support, resistance, and then go into whether it's an uptrend or downtrend, and take into consideration of various resistance levels, R1, R2, etc., and then take the trade. And then
so let's talk about. Sorry to interrupt you a little bit there, because I'm always watching the time here, and it's always so precious the time we get.
Sure.
So with the technical analysis side of things, so you're looking at support, resistance, bog standard sort of stuff, usual. I mean, obviously we have certain ways of using our support and resistance, but so you're taking that fundamental view that you might be forming and then looking for an excuse technically that backs up that fundamental view.
Yes, but that's more on not all of the asset classes. For example, if it's the stocks, shares, if it's the company, then I will take more fundamental and use the technical to enter. If it's a more liquid market like FX, then I will use more sort of a technical. It's not just a one approach that I apply.
Of course, because you're still trading shares as well, right? Okay, I've got my FX and index head on. So, okay, so talk about you've just won our little. We do at the moment a monthly competition with some of our traders, and you just won last month's competition. How did you go? How do you think you did that? I mean, it was August, for Christ's sake, and you managed to do a decent return in August. So, what was it? Do you think that helped you in August? Was there any singular event? Because sometimes it could just be one or two trades which pretty much made the month, or was it more consistent than that over a number of trades?
It was more consistent, I would say. It was based on the methodology which I learned from Easy Trader, and that's price action, momentum. That's primarily I used at the support and resistance level. Even if the price would have come at the support and resistance, I would not take the trade. I will wait for the setup to come, and I will wait for the price to provide the confirmation, and I will see the backing of the momentum before I take the trade.
Right, okay. If you, looking back over your trading, because I'm sure it's not always been an easy, steady rise over the shorter term trading. Investing is different. What advice would you give to yourself if you were looking back 5 years ago? What 3 pieces of advice would you give yourself?
The one that I learned from my experience is about acquiring appropriate knowledge into this area, and then applying that knowledge in a disciplined way, and then re-reviewing the progress on a consistent basis, on a consistent time frame horizon, whether it's 3 months or 6 months, depending upon what's the trading strategy. But it's very, very important to stick to the plan, to apply the learning, and let not sentiment or emotion come into the way of deteriorating the business, because there are some times when the emotion comes into picture, and then it says to come out of the trade or leave because market sentiments is something different. But more important to stick to the plan.
Right, okay. So, talking of plans, what's your plan for the future then? I know you're in consultancy and the likes is your other career. What's your plans with your trading over the next few years?
Probably within next 1 to 2 years, I'm looking to take this as a new business opportunity in terms of probably trading full time for myself.
Yep.
And then if got an opportunity to manage the business account, then I probably might take that as well.
Brilliant. Oh, okay. So manage your own money and potentially other people's money as well.
Possibly.
Right. Well, you've got it all mapped out. Thanks ever so much for coming on Tip TV. We're out of time. I told you it'd run very quickly. My name's Charlie Burton. Trade safely out there.